Pivot this morning is 43.78. Resistance at 84, 89, 94, and 4,400. Support below at 72, 65, 57, and 50. Pivot 78, support 72, 65, 57, 50. Resistance on the upside at 84, 89, 94, and 4,400. Remember that levels above are all-time highs, so be careful and keep your stops in place as the market is going to be reacting to the inflation number, PPI number that came out this morning. They were expecting plus 0.5. Came out at 1%, and the core was, excluding the core, was plus 0.6, and it came out at 1% also. So a little bit higher on inflation, but I guess it wasn't as bad as people thought because the market is pushing the highs here. Okay, so now, in addition to that big number, which everybody was looking at, this morning, we are going to have a Fed day. Well, I should say not this morning. Kind of doesn't start till 11. Okay, so good. We get the breather from all the Fed stuff until 11. Hopefully by then you are out of here because it's an F day. We don't like F days. F days stand for Fed. Not what you were thinking, because what you were thinking happens. So we're not going to go there. So we try to stay away from F days, and F days meaning that Powell's going to be testifying in front of the Congress today and tomorrow. And you know, he could say whatever he wants. He's going to have a Q&A section after his initial speech, or initial opening statement, I should say. And so anything could and will happen. So careful, as they say. You know, just careful there if you're going to trade later on this afternoon with Powell speaking, as the market continues to rally here as we open up here a little bit. So we'll see what happens. Again, just be careful. We're welcome to some of the new folks that are here. We are trading mini S&Ps. We have the levels that we gave out, plus the price action opportunities that might occur once the market paints some bars. The combination of both gives us setups to trade. The levels that we gave out are just a guide for the day. We can adjust them, tweak them, add to them, take away from them, all those opportunities there, because it all depends on what the price action does. The price action kind of dictates what we are going to do with our levels as well. And so we have price action opportunities plus levels that we use, and hopefully we can get maybe, depending on how active the market is and volatility wise, maybe we can get 4 to 5 trades during the course of a day. I would like to say that we average about 4 or 5 trades during the course of a day, during the course of well, we average about 4 or 5 trades. Let's just keep it that way. I think that'd be it's a fair comment, and that's how many we average. So see what happens as the market is coming up here to our 84, and we're definitely at the mercy of volatility. We trade volatility; we can't create it. So consequently, we have to be patient and wait for the opportunities to present themselves in this market. So we are trading equity futures, mini S&Ps. That's what we do here on an everyday basis. We're trying to take advantage of ebbs and flows of the market. Welcome to the trading room. In addition to the trading room, we also have an education package that we put together. If you want to maybe learn some of these setups that we have, learn how to get the levels, and the course, the objective of the course is for you to independently do these, find these trades and trade them on your own. That's what we're trying to do here. To do for you to become an independent trader. It's a great phrase, independent trader, right? All right. Anyway, that's the whole idea here, and so. But welcome. If you have any questions, if you put the chat box area up, that's where I see them, and that's where you should ask your questions. As the market is coming up here, we're going to test our 84 section. And remember, like I said, just keep your stops in place. Nothing here is etched in stone. These are all-time highs, so we never know where they're going to go. Whatever your stop is in place, keep it that way, and that way you keep yourself out of trouble, which is what we're trying to do, to keep you out of trouble for the most part. All right, so Powell's going to be talking. Philly Fed is going to be it's coming out here at Philly Fed is coming out here at 9 o'clock. Business inflation expectation number. So that's coming out here at 9 o'clock. As the market continues to slowly uptick here a little bit. Again, whatever we do, keep your stops in place. That way you keep yourself out of trouble and try to see it work in this 84 section here. Area, I should say, not section. Area. Bonds broke yesterday afternoon on the release of the auction results, the 30-year auction results. So that was it wasn't received too well, but they have slowly have come back there after they've disappointed. Wasn't disappointed, but it wasn't as good as an auction results as the market was hoping for. Consequently, they kind of broke off here a little bit. So that happened yesterday afternoon. Again, we focus more on the morning hours here as we're getting a nice little rotation here against our 84 area. Again, depending on how you're scaling in, this is part of the opportunity here is to scale into a level and to be able to trade multiple contracts and hopefully peel off some profits along the way as we're getting a nice 2-point rotation here off of our 84 level. And we're using the areas as resistance to get short there against that level that we have, and that is the one opportunity. Right, so nice rotation there against our 84. Good way to start the morning. And look at it, we got our first trade off in the first 5 minutes of the day. That's very good for us. That doesn't, sometimes we have to wait a long time and you get to hear me talk, but this was a little easier. I don't have to work so hard on this one. So we didn't take very little heat on it, and maybe some of you got the upper end. I don't know if we can post the levels here or not. I can definitely repeat the levels for us. As he's not here, so I will repeat the levels for you again that we gave out when the market opened up. Our pivot this morning is 43.78. Resistance up here at 84, which we worked already. Above that we have 89, then 94, then 4,400, then support below at 72, 65, 57, and 50. And again, welcome to some of the new folks that are here. We are trading mini S&Ps. We're trying to find areas of inflection that the market will give us an opportunity to scalp. 2 to 3 points is our targets on our trades. Well, likewise, amount of stops, and how you get in, how you get out is all dependent on each individual's risk tolerance, as everybody trades a little bit differently here, as you can imagine. If you do look at the chat box area, if you can put it to all instead of just to the panelists, I'd appreciate it there, Joel. If you look at the chat box area, you'll see the levels imprinted. There they are. Thank you. And I appreciate that, by the way. I don't know why I can't do it. It just doesn't work. I guess it's an extra step or two, and I'm not. I just don't feel like messing with it. All right, so nice rotation here against our first level of resistance. Right now, support will be back around the 75 to 76 area. Pivot is at 78 if you're trying to hold on to it for that move. Let's see what we could talk about here as we kind of wait. So really, we had nice rotation against our first level. Next support level we have is down at around, but we have first support level 72. Well, yeah, you could probably 72 would probably be the best support level that we have if we're going to use 74, somewhere in that range. But hopefully you've taken some profits along against the 84 here and have a trailing stop on anything else left over if you're going to do it. Fed Chair Powell is going to be in the hot seat today as he heads before Congress for his semi-annual testimony on monetary policy. Inflation, which was once the elephant in the room, is set to become the most heated topic at the grilling following yesterday's data of rising prices across the American economy. Consumer price indexes yesterday grew fastest clip since 2008, climbing to a 5.4 year-over-year versus a forecast of 4.9. While we've seen price increases before, most of them have been taking place in the areas heavily hit by a pandemic. Those included building materials and travel-related costs, which were hit by supply chain problems and shutdowns. But the most recent report suggested that these increases are broadening out. Core inflation, excluding food and energy, came in at 4.5%, making it the largest increase since September of '91. Until recently, the Fed has stuck to the script that inflation was transitory, though some rumblings over the outlook are being heard at the FOMC and broader investing community. Fed minutes last week showed some concerns over rising prices, with a substantial majority of policymakers are seeking inflation risks tilted to the upside. While traders have the gut reaction to the latest CPI, stocks dipped on Tuesday. Investors don't appear to be worried about the runaway inflation. Market expectations of serious price pressures have so far been contained by having these all-time highs, right? And positioning does not appear to have been influenced by the data, at least not yet. Lawmakers will likely drill the Fed chair about the central bank's support for the economy and how much importance it places on recent inflation figures, and is also likely to get political. Oh, gee, what a surprise. Democrats are pushed for an expensive stimulus program stating that there is no serious inflation risk, while the Republicans have generally posted that inflation is getting out of control and could harm the economy. All right, perfect. Just perfect to see them agreeing on something, agreeing to disagree. That's what they seem good at these days. Clown show over there in Washington continues. All right, so we again came up here. We tested the 84. We don't like to take a level twice or three times. Usually, the first rotation up to it is what we're looking for, and that's what we're trying to get here. And again, you're peeling some off. So if you had some, we're trying to stay short and have a trailing stop, you probably got filled. And now we're just going to be patient and wait to see what the market is going to bring to us next. Are we going to continue this rally, or are we going to, sell off a little bit? Again, the fact that Powell is going to be talking at 11, kind of just a wait and see type of thing. So the fact that we got our first level got triggered and we kind of used it to make a little bit of money against is not a bad idea, especially since we don't want to be around when he starts yakking away. We don't like Fed days. F days are not good for us. Every F day that I traded, I wasn't very good at trading F days. I have no idea why. I always waited till 1 o'clock. They used to have their, announcements at 1 o'clock. And so I always waited till 1 o'clock. I know. And then I was like, why did I wait till 1 o'clock? That was kind of stupid. I just waited to lose money. So now that we're here, I'm just going to tell you, learn from my mistakes and don't be around when the F day appears. Just my thought. You could trade it if you want. I mean, we do have traders who love that stuff. So not me so much. Anyway, if anybody has any comments, questions, thoughts, ideas that they want to share, put them in the chat box area. You can always share them, especially since the market's kind of looks like it's kind of might die down here a little bit. Don't know. I'm just guessing. Again, we'll see what happens here. Support right now, be around the 74 to 75 area. It's less riskier. That's correct, Adam. I mean, if the level's going to work, and it did, maybe a rotation and retest, maybe that could work too. But it all depends on volatility. Also, if we're really, really busy and moving around, then yeah, the first time's probably the less riskiest, especially if the level panned out and worked well. But there are some certain times where the market goes and retests the level, and then they'll give you that. So, I mean, the second rotation to it is a little riskier, but obviously a lot less riskier than the third rotation. Definitely don't want to be in there in the third rotation to it. So what I try to do is I explain the risk, and you as an individual trader should make that determination whether you want to take that trade or not. And how you determine that is by trading it and seeing how many times it works for you and how many times it doesn't, and what you think you like about that trade, the retest or not, how it retests, did it retest on a spike, high or low, did it retest on a double top like we did here. At least you have your exit strategy above 85-ish, if we get back up there. So different ways of looking at things, but the point here is that we try to explain the risk, and then you make that determination as a trader how you're going to get in. A big inflation jump saw stocks edge down from the highs yesterday as the debate over how the long Fed can keep policy loose resurfaces. U.S. equity futures are shaking off some of those concerns this morning, with the NASDAQ and the S&Ps are higher. Obviously, this was written a little earlier, while the Dow trails. Higher than expected inflation data wasn't the only thing to weigh on stocks, which greeted its second quarter earnings season with a little fanfare. Powerhouse Goldman Sachs and JP Morgan both beat profits and revenues, but their shares pulled back during the session. Some are attributing to decline to a peak in expansion cycles, which have historically been preceded by subpar performances in stocks, according to the data compiled by S&P Dow Jones indices. More banks earnings coming out this morning. There you have it. So this is nice to see that that the markets actually react to companies making money or not. All right, market rotating down here, coming down here to our pivot area. Support, again, if you're trading our pivot, first rotation to it. But it seems like it might want to go a little bit lower here. Anyway, we have 72 as our next good support level if you're going to do anything. All right, the market continues to downtick. Again, if you happen to stay short or maybe sold it against the retest, again, it's not what I would do, but if you did that, then you're making a nice rotation here. Again, the deal here is for you to make decisions on your own, to explain the risk and to have you decide how you want to make those trades independently. But all we try to do is explain the risk, and consequently, you are the independent trader here. And again, we're looking at the little support here a little, but better support at 72. All right, again, got a little bit of a pop here off of the pivot area. If you maybe were a little aggressive, again, there are aggressive traders and not. So if you did jump in there against our pivot, you got paid off here. Again, it's just a quick opportunity here to scalp the market. Okay, we're trying to find those areas of inflection for various reasons. Give us an opportunity to bounce off of a level and give us a scalp it. So patience is important, to wait for the market to kind of make a move one way or the other, and then give us that opportunity against an area that we're looking at. And the areas that we're looking at are not made up. I mean, I don't make these things up. I mean, there are reasons to trade. We try to layer in a whole bunch of reasons to trade. The more reasons that you have, the more confidence you should have in entering your trades and trading the market at a certain area. So what we're trying to do is we'll try to give you reasons to trade, and then you have to determine if those reasons are adequate for your risk tolerance. And then once that happens, you can decide to whether to take the trade or not. So everybody trades differently, and you have to understand that. Some people take more risk, some people take less risk. It's all understandable. Doesn't mean that one person's right or wrong more than another. It just means that they're taking more risk and they're finding more reasons to trade. That's all. We like to keep our cost to the broker as low as possible, so we try to be a little bit more picky, but doesn't mean that everybody has to be that way. All right. So we do have a, Atlanta Fed business inflation expectation index is coming out in about 6 minutes or so. You never know. I mean, there's inflation attached to the tag, so it might move the market a little bit. We'll see. We don't like to trade in numbers, so consequently be a little bit mindful of that. If that's going to happen. So a little small number coming out, and then we have Powell at 11 talking to in front of Congress. So that's always interesting. And then the beige book is actually coming out at 1 o'clock. Beige book is a culmination of all the Fed areas, banks, what they think the regional expectation is for business expansion in those areas. That comes out at 1. I mean, with Powell talking today, kind of makes that. Usually, I would tell you to be careful when that thing comes out, but Powell's talking today, so you never know. And it seems like we're a little range bound here. Again, there was you could have made a logical reason why to enter there against our 78 area. All right, we're just kind of coming back here, a little bit of area that the market was kind of trading at after the release of the inflation numbers. So who knows what's going to happen. And maybe we extend, maybe we don't. I don't know. No, I don't use tick. I look at the volume that's traded at any specific price to give us some opportunity there. It's like almost like market profile, but market profile using volume instead of time. When we kind of went to trading electronically, focuses was changed to looking at volume versus time because volatility is greater and the volume at a certain area might create some value. So all right, well, we're just kind of staying in this little range now. It's funny how market gets, you come in and you're expecting some movement and then all of a sudden moves and then all of a sudden it just dies. But we have a number coming out here in about a minute, so maybe that's half the reason. We shall see. So we'll see what happens here around this number. Maybe it was just waiting for it. Again, it's Philly Fed Inflation Index. See what happens here. support on the downside would be down at the 72 area now. Again, if anybody has any questions, feel free to ask in the chat box area. Market down ticking here a little bit before this number. But looking at them at the 72 is our next support level. Okay, numbers out. I guess maybe they knew it. I don't know. Maybe. Maybe not. I don't know. All right. Well, it's a little bit of a move. Unfortunately, it came right before the number, so it was kind of hard to say you wanted to do anything around there. And now it's coming back up here to our pivot. It looks like if we get above the 81, 82 area, we might go retest the highs. All right. Again, just coming back up here to hanging around our pivot area. What a surprise, right? What a surprise. We got a little bit of a move right on the number. Thought maybe we would get down to the 70 or 72, and it just kind of abruptly stopped 74 and change. And come back up here. And just kind of hanging around our pivot now. Get above 81, maybe we'll have a little bit of a rally back up to the highs. I don't know. Looks like it's setting up that way. Only if you're aggressive, maybe we're looking at that opportunity there. Again, welcome to some of the new folks that are here. If you have any questions, if you put them in the chat box area, that's where I'll be able to see it. If we can repeat the levels, if you in the chat, if you look at the chat, hopefully the levels will get up there for us. Thank you. There they are. And those are a guide to the day. You can tell our first level resistance at the 84 level worked very nicely. And then we just are drifting back and forth. We had a couple price action opportunities here. If you were a little aggressive, so considering it's been a half an hour, it's not so bad. We've got maybe 2 or 3 trades, again, depending on how aggressive you want it to be. And now we're just kind of hanging here at this little range we were at for most of the morning after the number came out. And we tried to get down to our support level at 72, but they stopped there at 74 and change and then popped back up here to this range. So that's kind of what's been going on so far this morning. In addition to Powell going to be talking later on this afternoon, and he's going to be in front of Congress doing his Q&A thing with all the beautiful representatives in Congress that we have that are all a bunch of nut jobs over there doing our people's business. Not too well, I don't think, because all they keep doing is fighting with each other. So that's what they're going to be. They're going to be asking him questions. So anything that could create some volatility might happen, and so we suggest very highly, especially because markets tend to trade emotionally off of a number really quickly, and then gets a little bit goofy there trading those situations when people are talking and then reacting to some statement and then realizing, wait, I was wrong. That's not what he said. He said this. And wait, he didn't really say that. He's actually said, no, well, I don't know what he said. And then it goes back to the same place it started from. So that's usually the case with these situations. So that's why we try not to trade when they're having these discussions in front of, especially when the Fed chief is chit-chatting away. So they're going to be asking him questions about inflation, whether, quote unquote, it's going to be transitory or not. And that's always going to create some volatility depending on how he answers it, especially if he balks. If he pauses for a second instead of being like very affirmative in what he's going to say, that could create some crazy volatility. And he didn't have to say a word. So let's stay away from that, right? Let's try to anyway. I mean, just my advice. But people like to trade that stuff, so knock your socks off if you do. All right, we are hanging around our pivot. Gee. Again, if you're trading anything above 81, you want to be out of any shorts if you're going to look for a trade. We have a little shelf up there for us. So anything above 81, you don't want to be short anymore. So if you're looking to get short, you have an exit strategy. If that's what you want to do here. But it seems like we're just kind of hanging around our pivot area, which is 78, kind of going nowhere fast. And it kind of makes sense that this is kind of happening today, especially because later on, he's going to be talking. So he used to talk at like 9 o'clock. And then because of COVID and everything, they've changed that to later, and like a couple hours later. All right, sure. So market profile used to be determined, or they used to use time as a factor for creating those, those areas of trade, those value areas that they created, and it was created at the time using time factors. But they've adjusted it, and we've always adjusted it to using it as the factor is not time, but volume traded at specific prices. So you get the same kind of bell-shaped curve using the volume traded at those prices versus bell-shaped curve you get versus using time as a factor, as an indicator. So that's what they've adjusted to, but we've adjusted to it. We were always using it that way too, because it kind of, if you see what prices are, how much quantity is traded at every price, you will see that kind of same sort of bell-shaped curve that you're going to see using the time. But again, because the markets are moving quicker, with trading electronically, you get those elevated volume areas that occur quietly. You don't even see it. If you're not watching it, you don't even realize that somebody's like buying or selling at a certain price, and creates that extra volume area. So that's what they look at now to help with the market profile concept. And then if you can't get the volume traded every price, which most ladder tickets should have it. All right, market is trying to downtick here a little bit. Next support level we have is down at 72. Not really. Yeah, I mean, the bars have to close first of all. All right, I haven't closed yet, so And even if it did close, there's that bar before it that closed below it, so it doesn't really legitimize that situation. What you're saying there. I try to. It's not like it doesn't interest me. I just try to focus more on the things that I know work for me. I try not to have too many things that I'm looking at. So I focus more on the things that work for me. Trading is hard enough as it is to have a million indicators out there to try to help you. You're always focused in on indicators instead of focusing on the price action. Since I'm focused more on the price action, that's what I'm looking at because that's the real time data that's in front of me. Versus like some of the in other indicators of MACDs and all those other indicators people like to use. So we got to keep it simple here and straightforward instead of the fact that I look at the volume that's traded is real time. This is not, I can see something. Somebody, they don't always show you what's traded, what's actually being trading behind the scenes. That the numbers are moving so fast sometimes that you don't even know how many traded at a certain price, especially when they're extending the range. And all of a sudden you see like 4,000 traded at a price that you would have never seen that before. But that's real time though. That's happening right there. So that gives you an indication of, you could use that to help you trade. So, and again, I try to minimize the number of things I look at. That way I don't get distracted. I'm just looking at what's in front of me. You're basically seeing what's in front of me with those charts. I'm not trying to hide something or do something that's on the side here. All right there, Robert. Good trade. You like that? Back here at our pivot. So exciting. That's okay. We had a nice trade this morning and then rotated back to our pivot earlier, and we had a nice rotation off of that. Could have made a case. Again, we said anything above 81 right now, you're on to be out of any shorts. So if you are looking to get short, maybe that's what you want to do. Next support level we have is down at 72. We do have the Fed's chairman speaking in front of Congress today at 11 o'clock Chicago time. So that's kind of putting a damper on the activities beforehand. And I would suggest that you maybe not trade Mr. Powell's Q&A, only because it's going to get a little whippy for not too many good reasons. So anyway, so that's why we're just kind of floating back and forth and kind of this range here. The market's kind of not doing anything yet. So patience is important. And we did have a nice trade this morning against our first level, so it's not like you have to be hungry for a trade. So again, we don't like to just trade for trading's sake. We'd rather wait for the market to kind of give us something to trade. But there are other traders who are always looking for other opportunities. We're talking about entries or exit points or strategies. Well, there's both. I mean, we do have our 84, which was resistance, though that is obviously a very kind of simple concept. That would be our entry point. The other trades that we had are all dependent on price action. So we do have certain qualifications for those trades. Basically, what we're doing is telling you that we should have certain reasons to make those trades. If those qualifications or those reasons fit into your risk tolerance or risk style, then you have entry points for those also. So entry points and scalping opportunities is what we're trying to do here for about 2 or 3 points, usually about 2 points for any price action opportunity. So finding reasons to trade gives you a reason for the strategy to be to initiate the strategy, and then you're looking for about 2 points on price action, 2 to 3 points on levels. So again, depending on how many contracts you're trading, if you're trading multiple contracts, and if against our 84 here, if you did sell it, maybe you were able to hang on there and cover them down at the 78, then it would have been a nice trade. That would have been a nice rotation off of that area. But if you didn't, if you traded in one lot and just took, 2 or 3 points off of that, that's fine too. So that's when that's what our stops are going to be as well. So 2 to 3 points on your stops and target areas off of an entry point. So what we did here was we put together a methodology that gives us opportunities to trade, gives us a reason to trade, and then depending on your risk tolerance, if you want to take that trade for the reasons that you think work, because we explain those reasons in our education course to everybody, and then you determine whether you want to take that trade for whatever reason that it may be, and then trade it accordingly. Now, not everybody takes the same trade, not everybody has the same risk tolerance, so that's an individualized thing. I'm just pointing out some opportunities that some of you could have taken, and if you did, that's fine. If you didn't, that's fine. But the only thing I will say that we should have taken 84, because I gave those levels out earlier this morning when the market opened up. Our levels are there all day, and then the price action opportunities are all dependent on risk tolerance and understanding the trade, how it develops, and finding it, obviously. Again, we're trading on both sides of the pivot there, so I don't know if I'm along there at all. I'm not. We're range bound here, so we got to get above 81 for it to rally. So you have an exit strategy here if you get in to get a short here against the 81, but that's if you want to be that. We're range bound, so I'm not really, it's trading on both sides of our pivot, so it's not like I'm looking to get long there or short there. There's no reason to, one way or the other, because it's just trading on both sides of it. So again, you're overthinking there, trying to find a trade, right? Sometimes you just got to wait for a market to give us an opportunity. And like I said, if you're, if I tell you that you have an exit strategy above 81, well, there's maybe a short there, possibly, right? Maybe 79 to 80 area, and then you got your exit strategy above 81 that gives you, a tight little exit strategy for maybe instead of 2 points, you're looking maybe a point and a half, and sometimes you just take what the market's giving you, right? It's not giving you 2 points in this little range game that we're playing right now. So Powell, he gave his opening statement. The text of his opening statement was released to the public. and that was done a while ago, and so they're already reacting to that. Or the market's already reacted to it. Well, I mean, it takes, how do you measure price action? Well, it takes a little bit of practice and a little bit of time, and also what to look for. Although things are not easy, it takes a little bit of time to understand it, and that's what, it doesn't always work the way you think it's going to work. So, but that's why we keep our stops in place. But that's what we're trying to teach here. Also, is what the market is kind of telling us, watching it kind of trade around here. I keep saying that anything above 81, we might go retest the highs. I said anything above 81, you want to be out of any shorts. Again, that was a little bit of a trade there. If you were looking for a trade, maybe sell the 79, 80 area. You had a nice rotation here. So that's the price action that you're looking at what the market, where you want to exit sometimes, and then they get an entry point for a short. So that's one way. Again, it all depends on how it sets up. I can't, every situation, every setup has its own dynamics. Right now, at this moment, this is where we're at. Right. And I kind of said that a few times that, I got short up there myself. I have my stop there above 81. So, and I'm just, this is the price action we're at. Sometimes the price action, it might not be so simple for me to read, and sometimes it's a little bit harder. But right now, at this moment, that's what the price action was telling me. That could change. So again, that's a good question. It's also something that obviously through time you get to notice a few concepts and ideas that work, that you've seen them work, and then you have to remember those and interact it. Kind of use that to help you find trades using price action. So again, it's not a way of measuring it. It's very arbitrary. More than, people always want, you want an indicator to tell you, here, get in or get out. This is trading. All right. There's no a measure here. This is watching what's going on in front of you and then deciding to act upon it because you see something. Is it always going to work? No, but because you've seen it work multiple times before, that you feel confident in entering that trade. So the more times you see something develop with price action, it's not always going to be straightforward. It's something that you have to, find those different price action plays that you've seen work in the past, you can recognize and then act upon it. Like recognition of the trade is one aspect, and then execution is the next. Don't get hooked up on a level there, Robert. You get hooked up on a level and you just... I told you what the trade was. Did I not tell you what the trade was? Exit strategy above 70, 80, 81. That's what I told you. You're sitting there, I gave you the trade. I can't say it more than I did. You have to act upon it independently of myself, right? You have to do it on your own. That's what we do here, right? We're trying to give you the opportunity to trade independently. Once you recognize the trade, then act upon it accordingly. Well, again, order flow is part of price action. That's definitely part of the price action. But when you're talking about order flow on electronically, the order flow can be rapid, quick, fast. You might miss half the things that are out there because of the algos that are in there and creating the volatility. So that is one aspect. So you're not, we're trying to find the area, and if the order flow corresponds with what we're looking for, then then you're going to be a happy camper, right? Because the order flow kind of backs up and we're getting a nice little rotation here against our 72 area. All right. Good rotation here against our 72 area. Again, how you scale in is part of the game here, right? I mean, obviously went down to 72.25, not 72. So depending on how you scaled in around that area. If you want to ask a question, you don't have to raise your hand. Just put the question in the chat box area, and we gladly answer them for you. Now remember, they're reacting. The market is, it's going to be reacting to Powell's, statements or lack of, right? So keep that in mind if you're trading, and maybe it's starting a little early, but it is happening. So keep that in mind if you're trading. The market might get a little bit rambunctious here before his testimony, but again, we don't want to trade his stuff. I mean, we just definitely don't want to trade any of his stuff. So if you're getting in here at 72 and you're getting a point and a half on the heels of Fed's, take some profits and then just wait for the next opportunity. I just don't like Fed days. That's all I can say. It's not my favorite day to trade. All right, we're working the 72 area here. And not only is today a Fed day, tomorrow is too. Oh, how beautiful. It's a 2-day conference. He gets in front of, I don't know, the House Finance Committee or maybe the Senate today. I don't know, one of those guys. And then they ask him questions and they do the same thing tomorrow with the other side. It's a beautiful thing. If you like that kind of stuff. I just don't like it. All right, we're working this 72 area here. Trying to get a little bit of a rotation for us. Just trying. You can see how if you're looking at the volume, how the volume kind of ballooned up there at the 73 area. And that's what we're talking about when you're looking at the market profile situation. As we're coming up here to our 2-point rotation here, there we go, off of our 72 area. And hopefully some of you are able to do that. Maybe some of you are staying long here. And a nice rotation here off of that level. Again, if you're trading multiple contracts, you're peeling some off, profits that is. If not, that's fine too. If you're just trading the one lot, then you got 72, you got 74. So This is a nice rotation here. We have to be a little bit patient. And you got a nice push up here off of that level. So our first two areas here got triggered very nicely on the upside and the downside. Then we had a couple price action opportunities there in the middle. We were suggesting maybe to get short against an 81 exit strategy. If you did that, then maybe you were able to stay short to come down here to the 72. I don't know. I was just saying that that's where you wanted to get short if you were looking for a trade. Again, we throw a whole bunch of concepts and ideas out there. You have to find those trades that you recognize, you can execute, and then trade accordingly.
Hey, a couple of quick shout outs and programming notes. I want to welcome those that are coming in as guests today. We have subscribers in, we have guests in, we have those that are part of Sol's private mentoring. If you're interested in sticking around or coming back, raise your hand and I'll send you out the opportunity to sign up for Sol's Friends and Family. It's a daily opportunity to come in here, receive Sol's proprietary scalping levels, go through the morning session with him. One of the things we brought up earlier is that if you're not done and banked your money for the day by 11:30 a.m., right now we're talking Eastern Time. It is 10:36 a.m. Eastern Time. It is July 14th, 2021. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. Hey, Scott, I'll send it out to you. Anybody else, just raise your hand so that I can send you out the information. It's an opportunity for you to come in here on a daily basis for a month. It'll roll over at the discounted price if you keep it. If you have any questions about the services, don't hesitate to ask. Use the chat feature to respond. Hey, Scott, that's out to you now. And I'll just lower your hand. Hey, Vincent, welcome. Hey, Timothy, Steve P, Stephen MC. Hey, Scott. Thank you. Hey, Avi, I'll send it out to you. I'm glad you picked up on that, Avi, because you've been asking some great questions, and I'm glad that you're signing up. And if you want those answers still answered on a daily basis, then it's a good thing to join this friends and family. Hey, Chad, how are you? Dave K, Devora. Hey, George T, you're part of Sal's course in his, not his course in his mentoring work, his monthly. Let me know back in chat. Yep. Thank you. And George T just let me know. George, you're another one that asks great questions. Just let me know back in chat. I think you are signed up for Sal's friends and family. Icy, welcome. Jay Christ, welcome. Hey, Joel, Johnny Z, Julio, KG, KP, Kurt, Mark S. Thank you, Mark. Hey, Mark, you part of Saul's? You are, yes. Peter O. You know what happens is I shorten the names. So if you notice when you come in, you know, some names I haven't done quite yet, but I look to shorten them all. Sometimes I don't, sometimes I do, but I get confused every once in a while. So I'll do a brief overview about what the opportunities are here for you as individual traders. This is an opportunity to look to develop consistent profitability in your trading by focusing on a price action trading methodology. This price action methodology Saul has been honing and working on for the last 25 years or so, and he is able to connect on a daily basis with you as you come into the service. He provides you with his key proprietary scalping levels, the ones that he's using in his trading for the morning session. The concentration is doing 2, 3, 4, 5 trades based on his price action trading levels and zones. There's a lot of adjustment and tweaking that goes on based on the reality of the market, the reality of the price change after the cash open. So the first level of service here is coming in as a guest. The second is transitioning pretty quickly into a friends and family member. And then as a friends and family member, you can have a private trading consultation with us. We'll find out where you are in your trade, where you'd like to be, what pieces of the puzzle you're missing, what to add. And if adding the price action trading methodology here is something you'd like to delve in further, Saul has an opportunity for you as a friends and family member with a nice discount, teach you and mentor you privately in a private mentoring class. So that's the 3 levels of service. First is guests, then it's coming in as a paid subscriber under the friends and family, and then having the opportunity to advance based on Saul's opportunity to work with him on a private and personalized level. You'll have access to the service on a daily basis and an opportunity to really buckle down and look to develop what we call consistent profitability in your trading. It's not for everybody. We get people that come in and kick the tires, and then, if they have to spend $1 or $2, they end up leaving. which is great for those that stay. And he's got a nice group of individuals in here now. It's a nice private group. And we encourage you to stick around, be part of it.
So
Let's see what's up.
let me take a step.
Hey, George, appreciate the feedback. Why don't we circle around again at the end of the week? It's interesting because a lot of the questions that people are asking are very good questions. And they relate to what you're looking for as the pieces of puzzle for your trading. I think it's important for you to know the TikTok and what happens here on a daily basis and how that relates to your ability to get better at your trade and your ability to focus on doing those few trades that present themselves and stay away from the other ones that can really mess you up. So we open up the service at 9 a.m. We have a group of people come in from around the globe. We've got guests coming in. We have subscribers coming in. We have individuals that are part of Saul's private course and mentoring class, all coming into this service. At around 9:25-ish, Saul goes to his screens and he sets the levels for his own trading. And he gives them out to everybody in audio. These are his levels and zones. And then Saul does a critical assessment. And those that are in Saul's class and his mentoring work learn how to do this. Critical assessment of what is the market really doing this morning and how, based on my pre-mapped out levels, I can weed out the bad things, concentrate on the good things. Weeding out the bad things means as the market opens up and those few bars are traced or part of the morning session, you can get a sense on how many contracts you like to do from a risk profile, what's happening based on the overall price movement. Is it orderly or is it crazy? So there is opportunities to adjust your day based on the reality of the cash open and the reality of the movement in the S&P 500 E-mini. And again, you have a pivot and you can see what happens around that pivot. These are Saul's levels. These are Saul's zones. And then you have the other levels based on price movement that you can take advantage of, but you also have to figure out or understand whether a level is still valid or not. There's some adjusting and tweaking going on or should be going on based on those levels. So there is a art form here that is picked up and learned by you as it goes on and you interact with Saul based on his price action trading strategy and the entries, exits, and stops. So that's what we do. So we always say that the morning session is the best session. It's for about 2 hours after the cash open. That's the heat map, the zone that Saul likes to look at. And every day is different. And if you're not done at 11:30 and you haven't banked your money for the day, then that's the real telltale for you as attendees here on whether you need help. The help first starts as becoming a member and part of Saul's friends and family, and then it moves on into whether you want to have a opportunity to work with him on a private level and a personalized level. The membership on a monthly basis has quite a few great deliverables for you as a trader. One is Saul, commentary during the morning session. Two is his proprietary scalping levels in his zones that are fixed and then adjusted and tweaked based on what happens during the trade action of the morning session. And that right there is worth its weight in, whatever has value these days. But the key is, how do you, as the owner of your trading business and the talent in your trading business, coexist and come out with a profit at the end of the morning session? And if not, who's going to help you narrow down what you're doing, critique what you're doing. So it first starts out with better information, great commentary in and around those areas and zones, and then the opportunity to do it on a daily basis on a rinse and repeat. Start to really pick up what goes on here and add it to your. Think about it this way. If better levels equal better trades, then you're in the right place, right? If standardized software is a false friend, which everybody uses, right? You're looking at your trading platform, you're looking at your bells and whistles, and really it's just leading you, in our humble opinion, or my humble opinion, into the abyss where it's very hard to get out of because it seems like it's good, it seems like it's working, but net, you're not making any money. So the vive la différence here for you as individual traders is to be able to work with, be part of, communicate with somebody like Saul, receive his proprietary levels and zones, which are, or you'll quickly find out based on your experience, are better than the levels that are spoon-fed by your software or done by calculation. And you can witness that for yourself. So Saul does not have to toot his own horn. Those that are aware and aware enough to know the difference, know the difference. So by this conversation, you should start to pay attention to what the difference is, why it's different. And if you have the opportunity to stick around, I think you'll be pleased. So, George, hopefully that answered your question, and welcome aboard. So raise your hand, and I'll send out the info to everybody about signing up for Saul's Friends and Family. And for those that are part of it, thank you. For those that are just signing up, thank you. If those that have Saul's Friends and Family or as part of Saul's monthly subscription, if you would like to set up a time to have your trading consultation, let us know in chat, and we'll set it up with you personally and privately. I am a artificial intelligence being that has gone nameless and to be nameless. David, you want to send me something in the mail, or?
I think this list is good, but I think a lot of it, they're interested in those top 5.
I'm the one that's been tasked by Saul to
The list of the top 10,
provide
which I think should be,
you the information about who he is and what he is and how he is. I also have the opportunity to
consider pay or
be part of the network, the world.
So I'm just trying to manage expectations.
But anyway, I'll be in the background if you need me. Again, take action, raise your hand, I'll send you the info if you haven't already done it. And let's help you move on from where you are to where you'd like to be based on your trading opportunity and your trading business. Thank you.
Easier to
All right. Well, you can see here we drifted down to 70 and change, and then came back up. We were looking at 72. We did bounce here off of our pivot here initially. We were looking for that little rotation off of that little area. Avi, in regards to your question here, yes, it would include how to figure out pivot, the levels, and a little price action that we talk about. Obviously, that's what the goal of the course here is, to show you all that stuff, as well as to help you determine which ones are stronger than others, and on sometimes why price action does what it does, so you can understand it a little bit better from my point of view. So we throw a whole bunch of stuff in there. There's a lot of setups that are shown to you and off of price action, and you have to determine which ones you like, which ones you don't like, which ones your mind's eye can figure out right away and trade off of, and not you. At the end of the day, it's your determination, but you make the determination. But we definitely give you reasons to trade, which is the price action opportunities that are encompassed in our course. All right, we did again rotate back to our pivot and then came off. I remember I said the rotation back to the pivot could be a little bit of a trade here off of a higher low, and this was the case. And if you're a little aggressive, it seems to be a little bit heavy, but we gave you the exit strategy of any short above 81 that still stays. It's a little bit stronger now, it's for sure. So you're going to take any short, that's where you want your exit strategy to be for sure. Remember, in an hour's time, hopefully you're out of here. Hopefully we're out of here now. We had a nice rotation against our first couple levels that we had, upside and a downside. And we also had a couple trades against our pivot there. We also, maybe if you were a little aggressive, wanted to be short, we gave you an exit strategy of where you want to get out of any shorts. And then all of those together gave you some opportunities to trade based on the little range we've been at. And ahead of the F day today, which is Powell's conversation that he's going to have with the congressional group of people he's going to be talking in front of. So I think we've had like 4 or 5 trades already this morning easily. And but if you just traded our levels, you did all right with those, regardless of any price action opportunities. And now we're just kind of a little weak, a little heavy, looking for, well, next support level we have is down at, I'll give you the levels. We got 72, which already got triggered and worked, and below that 65. And then 57 and 50. And I can give you a couple more. I don't know which way it's going to go. I got 43 under there, and then 36 if we get some movement. I don't know. All right. Again, hopefully you did all right this morning, and be careful trading the Fed, which is going to occur in about an hour or so. Thanks.
Hey, Avi, if you want to sign up, or Avi, if you want to sign up for Sal's Friends and Family, then we can certainly spend some time and go over it all. And we can do that privately on the telephone if you'd like, or through Skype or any other means. And that's for anybody else out there. If you want to have a private consultation about where you are in your trading and where you'd like to be, let us know. We can help you figure out what best to do when it comes to what you're looking for is based on Sol services. The first step is the first step, and the second step is the second step. So let's get the first step done. I think I sent it out to you. Let me know if anybody needs it. Raise your hand, and I'll send it out to you. Hey, Avi, what are you sending? We're not big fans of email, so just let me know if you want to do it personally and privately, how you'd like to do it. But let us know if there's something special that you're sending. Then we can certainly give you an email, but just let me know what it is.